I'd like to introduce myself. My name is Rass. I'm President of Commercial Insurance Analytics and moderator of today's panel discussion. Give you a little bit of background on myself. I was previously responsible for small commercial business at RSA, Aviva, and Travelers over the last 20 years. I'd also like to introduce our members of our panel today, starting with Brian, who you've already met, Brian Bartosh, Steve Kaukinen, President and CEO of Insurance Technology Solutions, Kathy Curran, National Director of Broker Solutions, Sales and Distribution and Economical, which is responsible for driving effective and efficient technology and workflow interactions between all the economical companies and broker partners. Then Tracy Maynard, commercial marketer and Lloyd's cover holder at Young's Insurance. Kevin Campbell, CEO of PolicyWorks. And finally, and Tom Reid, SVP for Western Region of Aviva Canada. So we've got a good cross. Oh, you switched seats? Jail kill seats, all right. So we've got a good cross-section in terms of vendors, insurers, and brokers on the panel. So to set the stage for our discussion, I'd like to start with a brief presentation. So how do brokers ensure they own this commercial space? Most of these are pretty intuitive, and they just make common sense. So understanding your customer's business, and by understanding your customer's business, you can focus on needs and value rather than just the cost. Making it easy for commercial customers to find and do business with you, whether it's through the web, whether it's through referrals, through advertising, direct mail, letting customers know that you have expertise in a particular class of business. Creating an educated business consumer. If customers don't understand the coverages and limits they purchase and how they protect their business, then it becomes just another expense that needs to be minimized. Producing a quote quickly and binding the account. I can't stress the importance of this because producing a comprehensive and competitive quote quickly enables you to minimize the amount of competition you face on quoting a prospect. If you take too long, they're going to go to other brokers. Whereas if you can give them 2 or 3 competitive quotes and explain the differences, you'll close the sale. Offer products that meet the customer's needs. Again, if you understand the client's business and how it works, you can ensure that the client has the coverages in place that meet their needs. Simplifying the process. So incorporating third-party data where possible to streamline the gathering of underwriting information, and leveraging insurer and system vendor capabilities to minimize the amount of work effort for a relatively low margin line of business. And finally, competitive price. But that competitive price being driven by process, automation, and analytics. You don't have to have the lowest price, and I think Brian went into this earlier. It's a matter of selling value for a fair price. So one of the examples I'm going to talk about is the UK market. I spent a year working for Aviva in London in the UK market. And the UK market is very similar, but also very different to Canada. One of the biggest differences in the UK market is they have a similar organization, for example. We have CSIO here. They have Polaris there that's owned by the insurers. iMarket is a data hub that was initially a portal when Polaris first created it. So brokers would actually go into the iMarket portal to get multiple company quotes. It has now evolved to a data hub. And that data hub essentially validates and facilitates integration between CMS vendor systems and insurers. So literally, when you go in, you capture a prospect data in your CMS in the UK, you transmit that, it goes through, it validates whether or not you're actually contracted to do that line of business with that carrier. It then fires the rating request with all the data to the insurer rating engine, returns it, and then it comes all back to your CMS in real time. So you could get back a declination, you could get back multiple quotes, you could get back a request for additional information. But it's all done in real time. Now, where the UK really has a significant difference with us is the fact that there's 4 major CMS vendors in the UK, Actress, Applied, OpenGI, and SSP. They have a 99% broker adoption rate. So every single broker has got a CMS that's built to our equivalent of CZO standards. So it makes electronic communication and data exchange relatively easy. And then on top of that, of course, they also have the insurer-specific portals that brokers can use as well. And they have insurer-specific question sets that ensure the brokers provide the necessary underwriting information. So it recognizes the fact that I'm getting a quote from RSA and from Aviva, that these are the questions I have to answer, and if I don't, I'm going to get a question coming back asking me to verify. Now, the other benefit is the fact that all the major UK insurers have adopted this. So ACE, Allianz, Aviva, AXA, NIG, QBE, RSA, and Zurich are all on board. So actually, they can go to the market and get multi-company quotes with a single transaction. And it's also the full trading cycle, so they can get quote, new business, and renewal that way. So comparing that to automation in Canada, it's a bit of a night and day. So to put it in perspective, depending on how you do the math, we figure there's probably somewhere between 2,500 and 3,000 brokers across the country, brokerages. Now of those, probably about 500 or 600 have got a commercial management system that's actually capable of data integration. Now, most brokers, the other thing is primarily here is the fact that most brokers actually don't capture data in their CMS, prospect data. So it's a huge disadvantage because in fact, it's interesting, I actually went and visited some brokers, and even the brokers that have CMSs and use them religiously, the vast majority of them will not capture prospect data. So once it becomes a premium paying client, they'll capture that data, but they don't capture it as a prospect. Risk and rate detail aren't captured and analyzed, and that's huge. And I'll talk about that a little bit later in terms of the analytics piece. The majority of brokers right now are still using Excel spreadsheets and Word templates, and you can't get access to that data, and you can't do the analytics on it very easily. And it results in increased cost and time to quote for the broker. And the net result is, what you see out there is the fact that insurers have moved to proprietary portals and call centers, which drives a higher expense ratio and result in premium for the client. So why automate? The efficiency gains are very significant. So in terms of turning around those new business quotes quickly and efficiently is absolutely critical, especially when you're talking low premium thresholds. Better service and turnaround time ensures that the customer doesn't shop the market and lets you show that you can do the shopping for them more efficiently and quickly and differentiate the product offerings on something other than just price. Better coverage for your clients. By identifying coverage gaps by client, enabling you to upsell coverage to existing clients, producing additional premium for the brokerage. Better pricing for your clients. So analytics is a negotiating tool, understanding what similar accounts are rated at and what the coverage and pricing history is for your client to negotiate better terms. And I'll get into that a little more in terms of the analytics slide. Complete submissions, so greater efficiency with less back and forth with the underwriter. And underwriter, I think PolicyWorks just did a survey recently, underwriters respond far more quickly to a comprehensive complete submission. Following CSIO standards provides the ability to upload and download risk data to insurer portals, and a number of insurers have done that. To underwriters for rating or for real-time data integration. So for example, I know Travelers and Coachman through SGI have created those real-time data integrations where you can actually do an upload from PolicyWorks and get a real-time quote back from the insurer. And finally, creating a prospect database in the CMS. And this goes back to what I mentioned earlier in terms of actually capturing prospect detail so that if you don't get the account this year, you can keep going back after it year after year until you close it. And in fact, I had experience with an insurer where we actually did this. We used classes of business that we actually targeted and wanted to grow. We would actually proactively quote business that we had not been successful on the previous year. We had a very, very positive feedback to that. Because at the end of the day, your pricing, your product varies over time. So what does automation get you? Analytics is a huge differentiator and a competitive advantage that I think most brokers and actually most insurers aren't taking advantage of. So producer and CSR performance. Having the ability to actually see who is successfully quoting and binding and the type of business they're quoting and binding and where they're doing it. So looking and finding out where the opportunities are that aren't being realized. Insurer performance, so which markets have the highest conversion rates by class and geography. That's a huge opportunity. Every insurer will give you the usual target list of 27 classes of business that they're really hot for. But in fact, if they can share with you their conversion rate, and you know that when you quote an RSA office package in Kitchener, you have a 65% success rate, the broker knows where to direct that business and where they're going to be the most successful. And finally, client coverage and rate history. And I think this is a huge opportunity that hasn't been taken advantage of in CMSs, is the fact that tracking coverage, limits, and rate over time, because that gives you the opportunity to leverage data to negotiate better terms. So for example, if I've had a client for 6 years and I've had them with RSA and I know what the loss experience has been, but I also know what the rate history has been on the building stock and contents and the liability, I can actually use that as a negotiating tool when my underwriter comes back to me and asks me for a 15% increase on the subsequent renewal. And that's something that just isn't happening today. So now, I've got a few questions for brokers. How many brokers in the audience? Put your hands up. Okay, most. Okay. Who here has a commercial management system in the office? Okay, that's quite a few. Who insists that all prospects and client data be entered into CMS? Okay, there's a few less.
Don't be so enthusiastic.
Who actually captures risk and rate detail for new business and renewals?
Can you specify that a little bit more, what you mean by that?
Coverage is a limit. So actually knowing that I've got $150,000 on contents and my premium associated with contents is $178. So you can actually track that, okay? But the number's smaller again. Now, who leverages that data to actually start tracking coverage and rating history for individual clients as a negotiating tool? See hands sort of going up.
Define leverage more again.
Well, again, having the history so you can actually have a conversation with the underwriter. When the underwriter wants to increase rates or restrict coverage, you actually have the data there that you can say, well, wait a second, this client's rate has jumped from a 17-cent building rate to a 42-cent building rate over the last 6 years. That's good. Unusual, but good. How many of you track employee performance using your CMS to see what your employees are quoting and binding? Okay, there's a few. How about tracking insurer performance in terms of the number of submissions you send to particular insurers versus what you're converting in terms of actual new business? Looks like there's more there. Okay. Who's asked their carriers for historical conversion rates by industry class or code? It's available. It should be available. They have the numbers. And if not, why not? Because that's a huge opportunity. If you know, otherwise it becomes anecdotal. Somebody says, oh, Economical has good office rates in a particular geographic area. But if you actually have the hard numbers, it makes it a lot easier for you to decide where you're going to get a quote from. Okay, so now what I'd like to do is open it up to the panel. And so the first question we have is, how are customer expectations changing? Maybe I'll start with Brian.
Well, I think just like the personalized consumer, the small business owner is having some typical expectation changes just because everything's available on the internet. So they're expecting real-time services. I want the answer now. Most of our clients think we have one CSR per client on staff, and so we have to break that illusion real quick. But just I think the expectations are getting higher and higher on that small business. And a lot of reasons, small business owners, they take care of a lot of different tasks in their agency. I think somebody had mentioned about just putting the value of our product at a higher level. I think you did in your introduction. So they see a value upon that instead of a commodity that they're just trying to bring the price down like they were buying paper towels for the bathroom or something like that. We want to make sure they understand what they're getting for our services. And a lot of times I look to the broker or the agency of not doing a good job of displaying their services. This is what we do for you. This is how we do it. They don't want to know insurance, but just to know what the services you're providing. Because some people look at it and say, gee, I pay this bill every year and I really don't talk to anybody and nobody talks to me, and I might as well look for other options that could be less. So I think the expectations are increasing overall.
Tom?
Thanks, Rick. I think there's my personal valet here. I I think there's a few things, and you talked about small business, and I think some of these changes are more prevalent in small business, but I think it's going to start to extend to the medium-sized enterprise as well. But basically, consumers are becoming more demanding. They know they can go online on their banking, in their banking world and get everything done, with a few clicks. So they don't see a difference between, a banking service and an insurance service. Why can't I go online and self-serve? Why can't I go online and print out, whatever documents, certificates, and what have you? So I think there's a lot of more expectation there, and that also develops in terms of speed of turnaround. Right, the days of people waiting 30 days for a policy change are, if not over, close to over. Again, the consumer doesn't see why that should be the case. You can get a loan in a couple of days or online in some cases. Why can't you get a vehicle swapped in and out same day? Why can't you do it yourself? So I think there's speed of turnaround, ability to self-serve, and electronic documentation. That's the three things that I really think have been changing and will continue to change.
Tracy?
I believe the customers are looking also for a change in the relationship. Not so much, they don't want to have to approach you, they want to be able to have the information available to them online or through social media of some sort, which also brings up, they want the instantaneous results that they're looking for. They want to be able to self-serve as well as not have to contact in the need for questions. They want to be able to find that available online as well.
Anyone else like to weigh in on that question? No? Can we move on to the next one? So what do you see as the opportunities for brokers in the commercial space, and how can they capitalize on them? Maybe we'll start with Kevin.
Sure. Well, I'm a little passionate about this, so full disclosure on that. But if you look at a lot of the brokers we work with that are mid-size, they have a balance of personal lines and commercial lines business. It's usually about 70% personal lines and 30% commercial. And as the direct writers that come in and other forces are commoditizing personal lines, they see their margins falling. So just shifting their focus over the next 5 to 10 years more to commercial is a good strategy, I think, for brokers in general, because price is not one of Brian's best cards. He mentioned this morning the 4 cards he had was price, service, coverage, and relationship, right? Well, you can't do the other 3 that are valuable if you don't have a price. So going forward, if you're a mid-sized broker, shifting your focus to commercial lines is a good move, because it does allow you to differentiate on the basis of your value proposition, right? And the value proposition is advice, choice, and advocacy for you guys. And you can do a lot more of that when you've got the premium or higher premium per policy, better commissions, better margins allow you to build those relationships that have higher retention rates, and it just sort of spirals up as a sustainable engine for growth. So that's the first opportunity, just commercial lines itself. The second one is there's a broad spectrum of risks in commercial, from small business to specialty lines. There's opportunities to be a specialist. We saw 2 really good examples this morning. In John Vallier's bullfroginsurance.com, there's a way to specialize on small package policies, and it's going to, those kinds of things will start to commoditize that too, which is why it's important to look at mid-market. And the other one was the example that John brought up of the broker that had 40,000 professional liability policies. That guy, that broker just built a machine to do that, and they probably make a lot of money doing it. So there's a lot more opportunity to specialize as well as differentiate in commercial lines. And the final opportunity is to use the technology that's there today. Commercial lines has always lagged personal lines by about 10 to 15 years in Canada, but there's some solid stuff there. Commercial management systems to automate. There's connectivity in place with insurers today that is really underutilized, and there's even mobility options from different vendors. So there's a lot of stuff there. To Brian's point, that isn't being used. He said, I think 20% of the brokers, less than 20% of the brokers use 80% or more of their systems capabilities. And the other point, the other takeaway, this is a challenge for you, was he said there was 2 people in this audience today that would go ahead and make a difference in their brokers. So I encourage you to be one of those 2. So just take advantage of what's there today. There's a lot of stuff out there.
Tom?
Thanks. I need to, Rick, you asked a few questions of brokers. I need to ask one myself. You talked about commercial management systems. How many of the brokers in the audience have 90 to 100% of the email addresses of their clients? Okay, I asked that question at gatherings like this, and it's it's typically a shockingly low number, because one of the things that I truly believe is an opportunity for brokers is to know their clients. And email these days is one of the key ways to do it. Obviously, it's super cheap, very effective. Everybody uses it. Everybody checks their email pretty much on a 5-minute basis. I'm sure 5 of you are actually on their BlackBerries right now as I'm talking. And I feel a little itchy that I'm not on my phone right now at the moment too. But one of the huge opportunities in my mind, there's a number here that I've got on my list. I'm not going to go through the whole list, but I just want to harp on the email for a second. I think it was Rick that just mentioned that most consumers, especially the smaller business consumers, get a bill from you or from the insurer once a year, and that's about the level of the contact that we have. Well, a lot of those customers have colleagues, they have referrals that you could get, they're going to grow into larger businesses, they're going to have changes in their business that you may or may not be aware of. Being able to stay in touch with those consumers, your customers, is going to drive your attention, it's going to drive referrals, but you have to be able to get to the point where you're trading content. Right? So you have something informative for them to be interested in, a reason for them to give you their email address. I put on a session a little while ago for some brokers in this kind of space looking at inbound marketing, and brought in an outside consultant to kind of teach brokers how to do this. And it was a soul-searching day. Everybody walked away with a marketing campaign that's centered around inbound marketing, email generated. But it was very, very enlightening. And the power that you have in your existing database of clients is incredibly powerful, but you have to unlock it. And the way you unlock that is to communicate with your customers. And in today's day and age, having a useful set of emails and a useful weekly or monthly or semi-monthly campaign around communicating with your customers is incredibly powerful. And in my mind, it's a huge opportunity today.
Kathy?
Yeah, we, where I see it is there's a lot of commercial departments in brokerages that are more service or retention focused, where we see opportunity is to drive more of a sales and service organization within your commercial departments. Some of that has to do with how some of the commercial producers have compensation models set up for retention versus new business, and they don't want to lose those retention clients while they're out servicing and they're looking for the new business. But so there's really two components to developing a sales and service organization. The first one is around the data, so I'm happy to hear everybody talk about using your BMS or your CMS to its full potential. Only if you have that data can you analyze what your customer segmentation should be and refocus your efforts into those areas. We also work with a lot of brokers where we see opportunities for them to not be more of a generalist in the commercial space. They might write a few policies within each line, and then when they go to write some of the higher margin or larger accounts, they find they don't actually have the training or the talent or the skill set to not only seek out, but to underwrite those and properly. So they're dabbling in it a bit, and those can get a little bit dangerous when it comes to losses and loss ratios around the underwriting side as a result. So those are really some of the key opportunities that we see. Certainly leveraging technology, which I know we have some questions about later, but lots of opportunity there with commercial.
Brian, can you give us a broker perspective?
Well, I think there's a lot of opportunities out there, and we talked about some of them just earlier discussion about differentiating ourselves, building a brand, and using some of the technologies out there. And I think one thing is brokers and agents seem to want to find one solution for all, and it's all ready today. Versus what we talk about in the change management side is to be able to take some of these incrementally and make yourself stand out outside your other competitors. Because as we get down to some of these questions, we look at what do we have to fear, and there's other delivery systems, and that's the fear. And we have to make sure that we can't just make up value. We have to build value with our clients. And so I look at it from a commercial standpoint, especially the small commercial, is to be able to deliver our policies electronically to our clients and through a portal. Being able to give them the ability to self-service when they want to. We talk about gathering email addresses. We spend a lot of time identifying what is your preferred method of contact. because clients seem to have different methods that they would like to be contacted or communicated with. So we make sure to identify that, so we're meeting more of their needs on their level. Because I still, as I mentioned a little earlier, feel like not just in the insurance business, but a lot of businesses where the consumer, whether it be commercial or even personal or small commercial, is being forced into certain types of situations because the other service path has been completely destroyed as far as what service would mean today. And so we're forcing people to have to take up other options to get the job done for themselves. And as a broker ourselves, we don't want that. We want to be able to have multiple methods of delivery and multiple methods of communication. I know that costs some money, but it's technology that allows us to do that much more economically than we could before. So, I look at the opportunity to fit into these clients. And somebody mentioned middle market going into that area also, and it is because a lot of our carriers in the States, and I'm managing similar in Canada, that size of that small business account and those products are growing and growing. So what we used to have to write a certain type of policy on are now using simplified policies with all-encompassing endorsements on some larger accounts. And so what that's done is change the pricing method. The pricing is a lot simpler now. And so we need to make sure we're taking advantage of everything we can as that size of that business group grows.
What do you see as emerging threats for brokers in the commercial line space, and how can they respond? Maybe we'll start with Steve.
Yeah, I see that the obvious ones are there. They're the direct writers, anything that's directly challenging a broker and how they're doing things. And the biggest one I see is the one we can't see. And it's happening now, and you talk to a lot of colleagues in the States, and there's a lot of discussion, and it's on the internet, you can see it, as the Google's coming in, okay? And Google's pretty big. They can do a lot of things. And that's a little on the scary side because it's going to be a disruptive technology that can come in, and we've talked about changing consumer expectations. And they are happening. I don't know why I can't walk into my insurance broker's office, walk out with a policy on the same day. But that's not really the case in insurance in general. But it's going to be, and it's going to be very quickly, and somebody's going to come along and they're going to start changing the way insurance is sold, and that's going to be very scary. The one thing that I think brokers can do right now is continue to strengthen your relationships with your clients. So that is the one huge advantage that all brokers in this room have, is the ability to maintain relationships with your clients. Never give them a reason to go anywhere else or look anywhere else. Make them really, really happy. And it's using technology and automation to take all the tasks that you spend time on and put it into relationships and selling.
Just my add on to Steve's comments, because what he brings up, years ago, predicting where the future would be is about our business being able to issue and deliver immediately to a client. When they walk in, they get to walk out with their washer and dryer or whatever it is. We get to walk out with a policy. We do have several commercial carriers now, and I was just thinking about the ease of doing business is one thing we talk about, but the cost of doing business. I've got 2 carriers now that issue commercial policies instantly and provide the PDF of the policy that we can immediately attach in our system, delivered electronically to our clients. And what I looked at is our workflows. There's no longer an activity for follow-up. There's no longer waiting to get a policy number to issue any types of certificates or any other documentation. And we're actually delivering a policy and billing and transacting immediately and getting paid for it. It's on the books. I mean, the cost savings from the company side and the broker side is huge because it's once and done. Once that client leaves, we have no more activity unless something else, a new event generates it. And if you think of new business today, how much time and handling do we have to put into that on the brokerage side in order to get it finalized before it's delivered? And there's a lot of touch points. And so I think what Steve brings up is his expectation of walking out with a policy is something we as an industry should make sure we're taking a look at. Now granted, a lot of companies have legacy systems behind the scenes and they don't have any real-time processing themselves, and so that's a big challenge. These are companies that put in new systems, all real-time processing. So if I write a policy right now and 10 minutes later they change it, I have to process a policy change because it's already off and running. So it's a little bit different mindset than what we are today in our batch and legacy modes.
Tracy?
I'd say the biggest threat at this point within the brokerage is just implementation of having that knowledge there and the systems available to you and not doing anything with it. Within our organization, it came down from management that this is what we were doing, done. It was implemented, we're using it, and we're finding some benefits to that, which enable us to meet the demands of the small contractors, the small business that are coming in and wanting that information. We have systems that are able to give us a binder instantaneously once we bind. Print it out, they can walk out with something in their hand.
Tom?
I think just to sort of add on to what the folks have said, I think there's definitely going to be some disruption coming. Think of, Kevin talked about how a lot of brokers have a significant chunk of their business in personal lines. What happens in 5 years from now when cars are self-driving and that source of revenue dries up? There was a bunch of news recently about how there was 9 Google car crashes and everybody said, well, good news, they're not going to work. Well, the reality is, even with those 9 crashes, they're safer as they exist today in their prototype fashion than you are out on the 401 right now. So they're coming, right? So that's a source of revenue that's drying up. But I think that's something to be afraid of, but it's something to think about. How are you going to adapt? Kevin talked about putting more effort into the commercial space. 85% of commercial today is owned by the broker channel. It's a significant driver of revenue for most insurers, and I think that one of the biggest threats there is that we're just not investing in it. We're just not investing in that space, and part of that investment is dollars. And as Tracy said, Tracy alluded to, part of that investment is time and energy and leadership in terms of how are you going to implement some of the stuff that actually exists today.
So the next question, how is technology helping brokers today, and what challenges remain? Maybe we'll start with Tracy on that.
I would say the biggest advantage is time management. You can quickly view what you have coming in, allot it to a space, deal with it, put it to rest. A lot of the disadvantages, what I'd say right now, is with respect to automation. Anything goes down, you're stalled. You're completely stalled. Your server goes down, anything along those lines, or your CMS malfunctions, is in need of repair, you've just lost any time that you've saved.
Steve?
It's interesting. I think everybody's saying, well, okay, take more advantage of the systems you have. I have a great story with respect to my own. I had an agency in White Rock, British Columbia. We hired a new staff member. She was with a company that had the same vendor that we had. And I came in, bought the agency from a technological standpoint. I thought I went back into the 70s. And I never thought we utilized our broker management system enough. And she goes, wow, are you guys ever advanced? You use your system so well. And I'm thinking, I can't believe that. So we're just not taking advantage of the technology that we have. It's organizations like this that probably can make a bigger difference. This room should be packed and people should be eagerly looking to invest in their technology that they've got. So that's basically a little story of mine.
I just wanted to add on to system downtime, because that is a big concern for agents and brokers. It's just, here I come so dependent upon the system now. What happens if it's down? I don't think it'd be any different if you went to Canada Tire and they couldn't have a credit card go through. And I've been in retail stores and that happens, and it's like chaos. We can't sell you anything because we can't run the credit card and debit card or whatever it might be, and nobody's carrying cash anymore, and all of a sudden we just have a stop. And I think as a business, we're risk managers, so in our insurance business, we should have ways of handling those types of situations. And we in our own agency, because of our multiple branches and our cloud computing, set up so that we could transfer calls to another branch that might still have internet access. So if one goes down, immediately transfer those calls over. And that's our plan and redundancy to make sure that can happen. We also installed 2 years ago a dual internet line, a T1 line through the phone service and a cable service, so that we had redundancy there. The important thing is make sure they don't run down the same road. And we did. Our telephone runs down the center of the state and our cable runs down the east coast. But if they run down the same road, the redundancy plan doesn't really work well, especially when fiber gets cut. But I bring that up because I think that a lot of businesses, as big as they may have been, don't have a good contingency plan if something like that happens. It's like we're out of business. And we need to find ways to make sure we have some redundancy built in if it's the way we handle our hosting of our data or how we access it, whatever it might be. I remember, and I'll just share a 30-second story, but we had some issues with the internet on both ends, and it ended up being more of a router type issue. But anyway, I brought up my hotspot on my phone, and 5 people connected on in the agency, and we were back up and running on the phone. That's a backup plan for us. And I'm thinking, this is what we have to do, is have it well documented. We barely missed a beat. I mean, less than 15 minutes of downtime because we were able to get back up. But I think it's something we have to all consider.
Yeah, there's actually quite a bit of technology and automation available in some of the small business, and especially on the IRCA side, which doesn't get talked about a lot. There's comparative IRCA coding that's available. That again, on the commercial side, while used as commonplace and personal, is not readily used in many offices. We've been fortunate. We've had some very high turnover or take up on some real-time integration for billing policy and claims inquiry. We have through PolicyWorks. It's a direct single sign-on integration. Usually we go to introduce some of these technologies and tools to brokers. They just weren't aware that they were there, or they haven't consistently adopted them. I think you see pockets within a broker operation, but those change champions that were talked about earlier, you need more of them within your businesses so that they can be the ones to show. It takes an inquiry, for example. It took what could be a 5 to 10 minute conversation on a phone with an underwriter down to a 10-second PDF returned in real time that you can now email out to your client. So you need to look at all areas of those transactions in the life cycle, right from quote through to the renewal to the end of the policy. So that's certainly something that we see as opportunities that's working well right now. And then the customer data that you mine, you're able to understand with that, and again, how to interact with those customers in certain areas, and you can capitalize on that when you have some of these solutions.
Okay. And what technologies and developments are showing promise? And sort of 3 different areas that I wanted to discuss. One was, how do you see customer self-service evolving in the next 3 to 5 years? Maybe we'll start with Kevin.
Yeah, I'm going to pass on self-service.
Okay.
Yeah.
Steve?
It's a tough one because I get asked that a lot by brokers on wanting a web that they give quotes through and things like that. And I'm almost discouraging that because I said to one, well, it's almost like you're creating a disintermediary to yourself because you're distancing yourself from your client. And I know things are changing. People want to serve themselves, but at the same time, once again, going back to the relationship thing, don't lose the relationship you have with your broker. Someone was saying email, and I'm a big believer that if you've got the permission to keep connected to your client and you can keep giving them something interesting, it's a fantastic way of utilizing technology as it is now. Once again, following the law, making sure there's an opt-out, making sure you're offering something of value. I think that's a fantastic opportunity.
I just want to echo a little bit what Steve's mentioning. We have to make sure we have relativity to our consumer. The same reason why we don't choose to use company service centers in the States, because we're just distancing ourselves more and more from our client. We don't want to do that. But what we found from a technology standpoint, in the States we have what's called activity notes standard, where the message comes from the carrier, and I know that they're doing some of that in Canada also, but where the policy declaration, the full policy is attached. And I chair a working group where we actually went out and started to understand the transaction, how we could get better business use out of it. one of the things we found is that carriers would sometimes distribute the agency or broker copy of the policy. Some even distributed the company copy, which didn't really make much relevance from a consumer standpoint. And so we went through, and even after polling the agents out there on what they would like to see, 70% said they'd like to see an insurance copy. I'm still wondering where the 30% are thinking, of seeing an agent's copy of the transaction. But the technology that we just put into place is where that message comes in, we can identify automatically which ones are viewable by our client. And so without any interaction on our part, we can take those messages coming in with a full policy, electronically deliver it to the portal for our customer to pick up. And what I like about a portal access for self-service is not about reporting their business, but some of those simple service things that they might go through, and we get activity messages back when they go access the portal and do certain things. And that's important to us because when we get that message that, hey, you're pulling up this type of information, we can pick up the phone and make a connection with that person because, as I was telling Jeff during a break, not everybody just wakes up in the morning and asks for a copy of the policy. There's some intent there, and so when we find those types of events, we respond different. Before, when somebody called and asked, our CSRs would just send it out and say, thank you, have a good day. And now it's a whole different conversation because we're going to be interacting with how they use the portal for self-service and when we might need to connect into it.
So, Rick, if I could, I'll build on what Ryan said in terms of mid-market. I like that comment about not losing touch with the customer, not losing that relationship. In mid-market, that's one of the areas you can really differentiate yourself. So as far as self-service on maybe reviewing the risk and recommending coverages, you've got to be there face-to-face or over the phone. There's no way I believe in the future a portal is going to solve mid-market and above. It'll be great for small business to get that stuff done quickly. But still, even in mid-market, there are opportunities through automatic certificate generation. Somebody, I think it was John Belly this morning, mentioned a client getting 145 certificates last year automatically, and they love it, right? So there's opportunities in any space to provide the simple things like billing, claims history, policy, downloads, those kind of things in the whole spectrum of insurance. The other part of the other facet of that question, what is the promising technology that we see? And if I look back over the last decade of attempts to automate insurance on the broker side and connect them to their insurers, one of the biggest obstacles there was legacy systems with no real-time capabilities. And so you saw the first generation of connectivity connecting to web portals because that was the only thing that you could connect to. And sort of the second generation, which is in the last 2 years, has been ASPAC capabilities that give real-time quoting for small risks. And there's two carriers, SGI Coachman and Travelers, that have gone down that path. And as we look forward, so one of the trends that I see now is that the insurers are focusing on replacing legacy systems with implementations of Guidewire or Duck Creek, or they're putting real-time capabilities into the legacy systems through Ratabase and other systems. So that will remove an obstacle that's been holding us back in terms of real-time rating and some of the more advanced capabilities. People don't recognize it, but there are 12 carriers in Canada that have worked with commercial lines initiatives over the last decade using CSO standards, using web services, and so on. So that's building on that platform. I think the third generation is exciting. We could get into electronic triage where every risk coming in is looked at by a computer to say, I can reject automatically on market reservation or appetite or how good the broker performs with me. I can route it to a real-time rating engine if it makes sense for that risk and I have that capability. Or I can make sure that when it gets to an underwriter that their workbench is automatically pre-populated so they're not wasting time rekeying information. So I think in the third generation we're going to see brokers and underwriters being to spend more of their time focusing on high-value tasks that actually differentiate them and provide that value to the customer.
Okay, one final question for the panel before we wrap up. How do you see mobile fitting into the future of commercial lines?
We'll take that one.
Okay. Be in the middle. It piggybacks a little bit on the self-service. I think there's a lot of opportunity there if we look at some of the weather-related losses that we've had in the past few years around risk mitigation and risk control activities, pushing out weather alerts to commercial clients, tips around ice damming, some of the other, again, more loss control, loss prevention. I think that's a really good place to start to engage the commercial clients on more of a mobile basis.
Anyone else?
We have a slightly different, I mean, that stuff will come for sure, and again, it's applicable across all of insurance. In commercial lines and farm, there's an interesting problem, which is on complex risk, getting out there and actually gathering the information, taking the photographs, and getting the spreadsheets of equipment and all that, and getting them all combined into one submission. And so our efforts on the mobile front so far have been about helping the producer do that job. If you think about a producer as sort of the point of sale underwriter for our company, you need tools to gather that information effectively. And mobile gives it's a nice, natural way to have a conversation with a customer. It's not like a computer, you can just stand there with them. And so I think there's another opportunity on that frontline underwriting piece for producers.
Okay, on that note, I think we're right at our time limit. So I'd like to thank everyone for participating and also thank our panel members.